Hey, folks, and welcome back to a very damp Money in Politics. And the weekend is gone. We're going to go back to it, at least for a few days, before we get into the 4th of July weekend. I hope your weekend was good. Mine was good. It rained like the dickens here, and there are streams swollen throughout the northern part of Illinois. So I hope that, in fact, I have to drive to Chicago tomorrow, which means I won't be doing a video tomorrow because I am taping two different things and won't be coming back until tomorrow's Tuesday, won't be coming back till Wednesday. And I'm not sure of my own schedule coming up. I'm not sure, what your schedule is coming up. I know we all got something to do on the 4th of July. I certainly hope so, right? So tonight I'm going to be talking about a number of things, and there's an investor I want to bring to your attention, at least to introduce you to his philosophy. When I started off doing this 6 months ago, I said that this is for beginners. That's who I'm trying to talk to. I know a lot of you are very sophisticated investors, and I appreciate you watching. My point isn't to talk down to anyone, but I don't want to be talking over people's heads. And I also have said this, and I'm going to repeat it. I don't think investing is that difficult, really. It's, I think a lot of people try to make it sound difficult. So, with that, we're gonna talk a little bit about that. Let me pick up real quick here. Where are we on Humble? And this is where today we started off high, we fell down, didn't start off or last very high at about $1.30, but that's where we were, and then we just had this choppy action throughout the day, ending at $1.22. So the big news is that on Wednesday, at 3:30 Central Time, we're going to have another investment call. So I will be back for that. I'll be taping that. I'll be doing a show on that, and that's big news. And that's pretty much the deal on, I think, to say today about Humble. There really wasn't a whole lot to say. The volume today, while it was down, the price was down, the volume was also down to roughly 4.5 million shares, so not a lot of conviction on the downside. Forwardly was up, marginally on a percentage basis, about 3%, but it doesn't take much to get 3% when you close at 20 cents a share. So that's basically the deal on Humble, and we'll have more, obviously, on Wednesday, and of course we're going to have I don't think we're going to get the second quarter earnings tomorrow, but I think it's just going to be kind of a review of some of the things that we've done. The earnings I expect will probably be coming up in the neighborhood. My guesstimate is maybe 2 weeks. But that said, I like to look. Let me before I go into the other investor guy, I've talked about DIG oil, and this is a 1-year chart on DIG, and you can see back here, this is where I was talking about it. Now this is adjusted for the 2-for-1 split, but I was talking about it back in November. And let's go to a year to date, and you can see a line in blue. Now, the thing is I want to bring up, and so write this down if you got a pen, okay? There's another leveraged investment for oil and gas, NRGU. Okay? Okay? And let me bring that up. Look at the difference. Now, I did well in DIG. I didn't know of NRGU back in November. But look at the difference. This is year to date, which is about the same now as, 6 months ago was January. But, you can see, let's look at 1 year. Over 1 year, DIG is up 100, we'll call 101, 103%, and NRGU is up 166%. 166% in 1 year, and if we just go back to the beginning of this year, NRGU is up 214%. I'm going to round it off. As compared to DIG, which is up merely 95% in the last 6 months. So again, I've been doing well on DIG, but I wanted to make sure and bring this to your attention, NRGU. That is not an ETF, that's an ETN. And you can put that in and look at the different prices in there for that investment. So if you want to play the oil and gas recovery game, yes, it's already gone up a lot. Is it going to continue to go up? That's very difficult to say. I had someone write in and ask me that question. It's difficult to say. It's not as easy as it was to say before when I knew we were just going to have a reopening of the world economy. I would say there's still a lot of, we're not flying as much as we were. We don't have the cruise lines going. I think we're maybe starting to drive more. So I would say oil and gas, but then you get other things in. What's Saudi Arabia going to do? Are they going to cut back on production or kick production up? Who knows? So there's no guarantees when you're talking about the price of a barrel of oil going forward. I knew before, at least my theory was, we had to use more oil, and so I was pushing that. So NRGU. Okay, there you go. That's something I would take a position, buy one share. It's reasonably expensive now, depending upon your frame of reference. It's almost $200 a share, but again, you're getting 10 different oil companies in there with one price. So you're immediately diversified by 10 different companies. Now, that said, I want to bring up a name that you may not have heard of. And before I do that, let me remind you, there's my email if you want to write to me and ask me a question, okay? There is a name that I was not familiar with until recently, Monish Pabre, who is an Asian Indian American. He went to Clemson University. He was not a wealthy guy, and he started off in 1991 with his IT consulting firm with about $30,000 from his own 401k account and $70,000 from credit cards. And he sold the company 9 years later for $20 million. So that was the year 2000, 21 years ago. So now he is an investor, professional investor, and he is an aficionado of the Warren Buffett School of Investing. Now, you might want to write that down, and this is a book. This is a book, The Low Risk Method to High Returns. Basically, what he's talking about is that on most of the time, you don't, as a successful investor, most of the time, you don't have to do anything. And people, I've talked about this before, if you want to get ahead, work hard, right? That's how we're brought up. And in investing to be successful, that attitude is a detriment, because we have this sense that we're supposed to earn it. We're supposed to be doing something. When in fact, the best thing you can do is do nothing. Often, the best thing you can do is do nothing. Here's what Mr. Pabre had to say.
The single biggest advantage a value investor has is not IQ. It's patience and waiting for the right pitch.
And I should say he was interviewed by Steve Forbes of Forbes Magazine on his YouTube channel, Intelligent Investing. So thanks to Steve Forbes for that. So that's the single business, is to be patient. And what he would say, and he's saying he's copying the Warren Buffett way, applies to what we saw last year with COVID, is that you kind of sit there and you wait and until there's a downturn in the market. So, as an example, if we go back to Dig, I remember Dig was, let's go back, well, actually 2 years, so I get the, if we look at Dig, and here's what I knew it was. $128 in January. Actually, that's December, but we get into early December, and it was right around $130. And a short time later, right around the St. Patrick's Day, it was down to $24. Actually, it got down to $15 right at that time, and closed at about 19. So you went from 128 down to 19. That is the time, Pabre would say, that's the time when you want to go to work as an investor. When you get some of these downturns that are significant, that's when you make your money. There's an old saying that Pabre puts a updated version on, that you want to be investing when there's blood running in the street. And when it's not running in the street, that's when you want to do nothing. And he says, that the reason most, and I've told you before, 90% of the so-called smart money on Wall Street underperforms the market with their mutual funds. Pabre would say the reason for that is they're always trying to get into the next big thing. They're always bouncing around, pulling their money out of something, going in that, and they're just working too hard. And he has an interesting way of saying that, is that the best thing that these money managers can do is learn to do nothing.
All investment managers' miseries stem from their inability to sit alone in a room and do nothing.
Now, I'm going to replay that because I want you, it's not that long, but it's powerful. And I want you folks to learn this. I mean, I could get hit by a truck tomorrow on the way to work or the way to Chicago. This is a good lesson. Let's listen to it again. All investment
managers' miseries stem from their inability to sit alone in a room and do nothing.
Okay. And then one more time, I'm going to have you listen to one point. And so, excuse me, Pabre was talking here, and he says that these money managers, the way we have people invest in money is all wrong. That we should have the money managers be people of leisure, and they should be going out and doing whatever they do. Painting, playing golf, fishing, and then when the world is sufficiently fearful, that's when they should come back into the office and go to work. Because when we are in a period, he would argue, like we are now, where we're near the highs in the market, that, you're not going to get any great bargains. So let's just listen to this. Is 19 seconds. Listen to this bite about where he thinks we have the financial world structured improperly.
the way the investment business is set up, it's actually set up the wrong way. The correct way to set it up is to have gentlemen of leisure who go about their leisurely tasks. And when the world is severely fearful, is when they put their leisurely tasks aside and go to work.
So there you go. You can find him, you can find his book, The Low List, which I have not yet had a chance to read. I just became somewhat familiar with him, but he makes a lot of sense. And he says things that I've said. Again, I just kind of found out about him. But anyway, here's his book. You can look it up. You can buy it if you want. Maybe you can get it at the library. And the thing that I started this again 6 months ago, not just to be talking about Humble, but to help share some of the lessons that I learned along the way, because I didn't have anyone showing me the ropes. And I wanted you to know what mistakes are people making and what can you do that makes sense. So a lot of times is when you can buy some of these great companies, you know, a lot of you are sitting there thinking, I got to find the next big thing. I got to be investing in the next big thing. And if you indeed can find the next big thing, that might be a way to make a lot of money, just like if you had invested in Amazon a number of years ago. In fact, when I was doing local news, one day a week I would do a feature story. And 2 weeks in a row, the one was, this is, I don't know, back around 2000, it was about 20 years ago, now that I think about it. There's this guy who was in his apartment, and he was selling marbles, and he was selling them on eBay. And I'd never, what's eBay? Never heard of it before. The next week, I go to a guy who is a collector of golf clubs, and he was talking about eBay. So there's 2 times I had, a hint, and I didn't buy eBay. And I always thought, man, that was a fortune because I wouldn't pay a hint. So yeah, if you get in on the next big thing, that is a way. But as we saw here with the drop-off, and we're going to have these drop-offs from time to time, folks. When you have a drop-off, like we did in the market, it wasn't just dig, it was everything. Everything collapsed. The NASDAQ collapsed. And when that happens, that's a time when you want to go in, like the fireman showing up at a fire, and when the market's on fire and burning to the ground, that's when you want to show up with your cash and start buying. And if you want to have a list of things you want to buy if they're cheaper, and you can start putting that together now, then do that, okay? But I would recommend writing. I think I'm going to get his book. It's a book that I think from what I understand, it's not one of these books that's hard to understand. But I think this guy is worth listening to. He's made a good deal of money. He is trying to help, as I am trying to, help by educating people on the wherewithals of making money. And there's a lot of people that talk about making money. And there's some good young people out there, by the way. I don't want to make it sound like you got to be an investor for 40 years to know what you're doing. I'm just saying there's a lot of people talk about making money. A number of them, and you can just kind of tell whether they're grounded or whether if they're just full of hype. If they come off like a used car salesman, you might not want to pay attention to them. But when we talk about being patient and finding something, we're all hoping, as an example, it's not the only thing in my portfolio, but we're all hoping that Humble is the next big thing. So the one thing is we heard in tonight's episode, you have to be patient and not to really pay attention to all the market churning. You're going to have the ups and downs of the marketplace. That is everything, right? You're going to have the ups and downs. That's Humble right there. Again, this is dig, and you can see that over 2 years, or over 1 year, the ups and downs, ups and downs, up and down. So, folks, I guess this is just a elongated way of saying find the right stock when the market and hold on to it. Be patient. Don't think you got to be constantly doing something all the time. You don't have to be buy. In fact, what I've told you before is build up your cash position. When sometimes something goes up a bit, sell a handful of shares and put it in cash and keep it in cash. And then if you want to be in a position where if we had something come out of the blue, and think about that. We just had COVID come out of the blue. We had 9/11 come out of the blue. We had the Greek debt crisis of a few years ago. I think around 1998, we had the Mexican peso crisis. It's always something. We just don't know what the something's going to be. So you want to be ready with cash to take advantage of those things. I've said it before. I'm just repeating myself, but I wanted to bring in Mr. Monish Pabrai, who is basically saying the same things I am, so it's just not me touting and beating on this drum. With that said, take care, and we will see you, not tomorrow night, but we'll see you on Wednesday. Okay? Until then.